CA Exam Series. E-Learning. This is Sarah. I am gonna teach you GST classes. Welcome to GST Animation Lectures, innovative and student-friendly. CA Exam Series. Your success begins here. What is tax? Tax is nothing but money that people have to pay to the government, which is used to provide public services. Taxes are broadly classified into direct and indirect taxes. Direct taxes. A direct tax is a kind of charge, which is imposed directly on the taxpayer and paid directly to the government by the persons, juristic or natural, on whom it is imposed. Indirect taxes. If the taxpayer is just a conduit and at every stage the tax incidence is passed on till it finally reaches the consumer, who really bears the brunt of it, such tax is indirect tax. In simple terms, direct tax means the person paying the tax to the government directly bears the incidence of the tax. Progressive in nature, higher rate of taxes for people having higher ability to pay. Indirect tax. The person paying the tax to the government collects the same from the ultimate consumer. Thus, incidence of the tax is shifted to the other person. Regressive in nature, all the consumers equally bear the burden, irrespective of their ability to pay. Major direct and indirect taxes. DT, tax on income, interest tax, expenditure tax. IDT GST and customs duty. Features of indirect taxes. An important source of revenue. Tax on commodities and services. Shifting of burden. No perception of direct pinch. Inflationary. Wider tax base. Promotes social welfare. Regressive in nature. Birth of GST in India. It has now been more than a decade since the idea of National Goods and Services Tax, GST, was mooted by Calcutta Task Force in 2004. Subsequently, the then Union Finance Minister, Shri P. Chidambaram, while presenting the Central Budget 2007 to 2008, announced that GST would be introduced from April 1, 2010. The talks of ushering in GST, however, gained momentum in the year 2014 when the NDA government tabled the Constitution 122nd Amendment Bill 2014 on GST in the Parliament on 19 December 2014. Subsequent to ratification of the bill by more than 50% of the states, Constitution 122nd Amendment Bill 2014 received the assent of the President on 8 September 2016 and became Constitution 101st Amendment Act 2016, which paved the way for introduction of GST in India. GST is a path-breaking indirect tax reform which will create a common national market. GST has subsumed multiple indirect taxes like excise duty, service tax, VAT, CST, luxury tax, entertainment tax, entry tax, etc. Concept of GST. Before we proceed with the finer nuances of Indian GST, let us first understand the basic concept of GST. GST is a value-added tax levied on manufacture, sale and consumption of goods and services. GST offers comprehensive and continuous chain of tax credits from the producer's point, service provider's point up to the retailer's level/consumer's level, thereby taxing only the value added at each stage of supply chain. The supplier at each stage is permitted to avail credit of GST paid on the purchase of goods and/or services and can set off this credit against the GST payable on the supply of goods and services to be made by him. Thus, only the final consumer bears the GST charged by the last supplier in the supply chain, with set-off benefits at all the previous stages. Since only the value added at each stage is taxed under GST, there is no tax on tax or cascading of taxes under GST system. GST does not differentiate between goods and services, and thus, the two are taxed at a single rate. Deficiencies in the existing value-added taxation. Non-inclusion of several local levies in state VAT such as luxury tax, entertainment tax, etc. Cascading of taxes on account of levy of non-VAT-able CST and inclusion of SEN-VAT in the value for imposing VAT. No SEN-VAT after manufacturing stage. Non-integration of VAT and service tax. Double taxation of a transaction as both goods and services. Framework of GST as introduced in India. Dual GST. India has adopted a dual GST which is imposed concurrently by the centre and states, that is, centre and states simultaneously tax goods and services. Centre has the power to tax intrastate sales and states are empowered to tax services. GST extends to whole of India including the state of Jammu and Kashmir. GST is a destination-based tax applicable on all transactions involving supply of goods and services for a consideration subject to exceptions thereof. GST in India comprises of Central Goods and Service Tax, CGST, levied and collected by central government, State Goods and Service Tax, SGST, levied and collected by state governments, union territories with state legislatures and union territory goods and service tax, UTGST, levied and collected by union territories without state legislatures, on intrastate supplies of taxable goods and/or services. Interstate supplies of taxable goods and/or services are subject to integrated goods and service tax, IGST. IGST is approximately the sum total of CGST and SGST UTGST and is levied by centre on all interstate supplies. Legislative framework. There is single legislation, CGST Act, 2017, for levying CGST. Similarly, union territories without state legislatures are governed by UTGST Act, 2017 for levying UTGST. States and union territories with their own legislatures, Delhi and Puducherry, have their own GST legislation for levying SGST. Classification of goods and services. HSN, Harmonized System of Nomenclature, code is used for classifying the goods under the GST. A new scheme of classification of services has been devised wherein the services of various descriptions have been classified under various sections, headings and groups. Each group consists of various service codes, tariff. Chapters referred are the chapters of the first schedule to the Customs Tariff Act, 1975. Registration. Every supplier of goods and/or services is required to obtain registration in the state UT from where he makes the taxable supply if his aggregate turnover exceeds 20 lakhs during a financial year. Composition scheme. In GST regime, tax, that is CGST and SGST UTGST for intrastate supplies and IGST for interstate supplies, is payable by every taxable person, and in this regard provisions have been prescribed in the law. Exemptions. Apart from providing relief to small-scale business, The law also contains provisions for granting exemption from payment of tax on essential goods and/or services. Manner of utilization of ITC. Input tax credit, ITC, of CGST and SGST GST is available throughout the supply chain, but cross-utilization of credit of CGST and SGST GST is not possible. That is, CGST credit cannot be utilized for payment of SGST GST and SGST GST credit cannot be utilized for payment of CGST GST Common Portal. Resultantly, Common GST Electronic Portal, www.gst.gov.in, a website managed by Goods and Services Network, GSTN, a company incorporated under the provisions of Section 8 of the Companies Act, 2013, has been set by the government to establish a uniform interface for the taxpayer and a common and shared IT infrastructure between the center and states. Primarily, GSTN provides three front-end services to the taxpayers, namely registration, payment and return through GST Common Portal. The functions of the GSTN include facilitating registration, forwarding the returns to central and state authorities, computation and settlement of IGST, matching of tax payment details with banking network, providing various MIS reports to the central and the state governments based on the taxpayer return information, providing analysis of taxpayers' profile, and running their matching engine for matching, reversal and reclaim of input tax credit. GSPs ASPs. GSTN has selected certain IT, ITs and financial technology companies to be called GST Suvia providers, GSPs. GSPs develop applications to be used by taxpayers for interacting with the GSTN. Benefits of GST. GST is a win-win situation for the entire country. It brings benefits to all the stakeholders of industry, government and the consumer. It will lower the cost of goods and services, give a boost to the economy, and make the products and services globally competitive. Creation of unified national market. Mitigation of ill effects of cascading. Elimination of multiple taxes and double taxation. Boost to Make in India initiative. Buoyancy to the government revenue. Constitutional provisions. Article 265. Article 265 of the Constitution of India prohibits arbitrary collection of tax. It states that no tax shall be levied or collected except by authority of law. The term authority of law means that tax proposed to be levied must be within the legislative competence of the legislature imposing the tax. Article 245. Part 11 of the Constitution deals with relationship between the Union and states. The power for enacting the laws is conferred on the Parliament and on the legislature of a state by Article 245 of the Constitution. Article 246, it gives the respective authority to Union and state governments for levying tax. Whereas Parliament may make laws for the whole of India or any part of the territory of India, the state legislature may make laws for whole or part of the state. 7th Schedule to Article 246, it contains 3 lists which enumerate the matters under which the Union and the state governments have the authority to make laws. List 1, Union List. List 2, State List. List 3, Concurrent List. We hope this video helped you in gaining knowledge. See you soon with another video. This is Sarah, signing off.